Hello everybody, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. We're part of the Archer Daniels Midland Group and we are the largest non-bank clearer in the world. I'm also Director of the Society of Technical Analysts, which is the oldest and largest such society, a not-for-profit organization helping support, give information, education, examination and accreditation for technical analysts throughout the world. I'd like to welcome you to a fantastic panel session. We're going to be looking at ESG criteria and trade finance, how these changes will affect your ability to get finance. And I'm going to ask our panelists, who are a fantastic group, to give their introductions as well. And Ben, can I ask you to give your introduction, please?
Thank you, Eddie. Hi, my name is Ben Dickson. I'm a director at Origin Commodities, a small East African exporter. I've got about 20 years in trade finance and risk across a broad group of soft commodities, so sugar, cocoa, coffee, and milled rice as well.
Brilliant. Thank you very much indeed. Maryana, could you give your introduction to our audience, please?
Hello, everyone. My name is Maryana Stober. I'm a lawyer and I work as Associate General Counsel EMEA for ADM, Archer Daniels Midland Company. In my second role, I'm a president of WISTA Switzerland, which is an NGO aiming to promote women in shipping and trading industries. Thank you.
Thank you very much indeed. And Will, would you like to introduce yourself, please?
Yeah, thanks, Eddie. Good morning to everybody. My name's William Rook. I'm head of refined sugar and ingredients and packaging, as well as our sustainability program at Czarnikow Group. And Czarnikow, very quickly, is a global business managing supply chains for the major food and beverage companies around the world.
Thank you very much. As you can see, we have a gold-plated panel here, ready to answer your questions and also talk amongst ourselves while we're waiting for them. There is a button on the bottom which says Q&A. Please put your questions in that because we're here to help you as well. So please put your questions, and I'll be putting them later on to our audience, from our audience to our panelists. The first thing I really want to talk about is the changing demand and commercial aspect of sustainability here. Let's go back a little bit, actually. Let's go ESG criteria and trade finance. How will these changes affect your ability to get finance? And Ben, what are your thoughts on this?
My feelings are that it provides an opportunity for businesses such as myself, where we're at the beginning of our journey, whereby we can set ourselves up in a way that we're doing business the way that we want to do business. So I feel that there's plenty of opportunity out there because when you start, you don't have any legacy issues whereby you need to retrofit what you're doing into those criteria. So I feel that the drive at the moment towards ESG is definitely an opportunity for a startup. I would say that there is challenges because obviously the level of depending on the criteria that your lender wants to provide to you, this obviously puts a burden on you as a company, and obviously there's reporting requirements which can be quite in depth. So obviously you see challenges for a small company such as myself, whereby we probably can't maintain a high level of reporting that a larger company could, and also there's the costs involved as well. So the funding that I'm seeing is probably more from the alternative sector rather than from the traditional sector, purely because, well, for many reasons, but the largest one being that my business is new and it's small.
That's actually very interesting, and we're going to go into that alternative sector in a little while as well. Maryana, from your point of view, from an established company, and also on behalf of WISTA, and your personal thoughts I'm actually after, what are your thoughts about that as well?
Thank you, Eddie. A good question. I think that attitude and requirements around sustainability and thinking around this topic has changed dramatically, tremendously in the last 10 years. So now there is a very strong business case for sustainability, and we see that legislators are pushing for this, investors are demanding this, and society as a whole, consumers are demanding this as well. So today it's a very relevant topic and it's different than before, as I said. And we will speak later a little bit about the disclosures and reporting requirements. In short, I would like to say now that there are already several legislations that require companies, depending on where they do business and where they are registered, to do certain disclosures. And we see there are more and more legal requirements coming up in different countries. And the biggest challenge I see with these disclosures is not the fact that that each responsible company, big or small, has to know its supply chain and monitor what's going on in its supply chain. I think that is clear and everybody has to do it. But in my view, the biggest challenge is to make sure you navigate around all these disclosing requirements in different jurisdictions. And here I agree with Ben that it's easier for the big companies that have a structure to do that than for small companies that perhaps don't have that structure.
Thank you very much indeed. And I appreciate your points on that as well. Will, what are your thoughts on that and in commodity specific, as your company is in many ways?
Yeah, no, thanks, Eddie. And look, you know, Maryana, I think, has summed up very well. The big change really is the change in attitude, first of all. And certainly over the last 10, in particular, the last 5 years, and I would say even if we accelerate through to sort of, say, post-COVID, but as we go forward this year, there is a dramatic change in people's attitudes. And this is not just single businesses, but it's the whole sort of business sector. And as Maryana says, it's the sort of government sector as well. So we're going to see a shift to both stick and carrot, if that makes sense, people going forward in terms of how you make that change happen. So massive shift. And now it's about, in my mind, is, okay, the approach. How do you actually make these changes happen? But maybe just a couple of quick things. I mean, going back, say 4 years ago, we were working with one of our major banks, and they had in parallel, it was quite interesting, they had their whole sort of sustainability approach, which was largely round table without in any way being rude to that, and then they had their commercial approach, but running both in parallel. And there was no, you know, we said, this is bonkers. You know, you should actually be commercially leading this and blending the two together. And this is where you're going to get a real hybrid of real value for your clients. And indeed, that's what they are doing now. And they're starting to see they're able to make some real impact and change as a result of merging the two together. So a lot of change ahead. And on the trade finance side, very quickly, I would argue, and maybe, again, without being rude to anybody, but I'd argue that the trade finance is somewhat behind the curve when we look at other sort of green investment and you know, green bonds and this sort of thing. So longer term debt and longer term investment strategies, I think, are probably you know, in deeper already with regard to their ESG criteria. And trade finance is perhaps a little bit behind the curve. That's not to say that people are now you know, readdressing that balance.
I think it's interesting your point that, you know, people are looking to address it, but a lot of people are still thinking, well, ESG, well, that's in trade finance, that's something that happens to other people, not to us. And so, you know, we need to sort of like get people on board with it. And I really appreciate the point about blending the commercial aspect in with the sustainability, or not just the sustainability, but the whole ESG ethos behind it, because there's a lot of talk about sustainability, there's a lot about decarbonization, but, you know, ESG is a whole area beyond that as well. And I was thinking, Ben, what are your thoughts about the commercial aspects in your area of blending those two in together?
Well, it's a good question. I feel that by blending it, the two things should run coherently. I mean, I work in coffee. Coffee is it's a very short supply chain from the farmer to the end user. There's not a lot of processing beyond the milling and the fairly basic, the necessary process which occurs in country. By the time the raw commodity itself is in the hands of people such as ourselves, we are already, the process from there is very short. It goes to a roaster, the roaster roasts it, people drink coffee. So you can drive positive change through that ESG process, because the nature of coffee to an extent is that you are looking at, it's an agricultural product, it's a plantation in some of the countries, but particularly where we're looking at it, where we're in East Africa, most of the farmers we work with are relatively small holders, or their forest plantations or semi-farm plantations. So you can drive good business that way. And I think there's an opportunity through ESG financing to looking at driving change really, and driving and making impact investment. And we've seen it recently through, particularly in coffee, a move away from necessarily, obviously the certification bodies are very important. What we found recently over the last 3 or 4 years was a drive towards direct trade, where certain players in the market, so roasters, retailers want to feel that they're directly impacting a community, and they develop this direct trade link. And I think that's a part of ESG, which is you can encapsulate it as a broader part of ESG, but it's that direct trade and that feeling that, especially with coffee, where you can talk about the farmers you're buying from and the processes involved, that allows you to drive, obviously, environmental improvements, which are well covered by the RFA and USCAFE, and society benefits you get from the Fair Trade Organization, but also from being able to support roasters and distributors within the coffee supply chain, who are community interest companies, so social enterprises, which are designed purely to pushing more money back into, so to overpaying almost the farmers. So I see a lot of potential there.
It's interesting what you've said there, especially because of the short supply chain. Maryana, what are your thoughts about that? The way that we're seeing from the legal point of view, the demands from some of the banks, and what you're demanding from your suppliers and others in WISTA as well, who in respect of that.
Yeah, in WISTA, first of all, in WISTA we have our members are mostly ladies, and they are from different sectors, but a lot of them are from commodity trading companies, also coffee traders, food commodities and non-food commodities. So this is the topic that we do discuss in WISTA as well, because that's a very relevant topic for the industry. What we see that there are several legal disclosures, like UK Modern Slavery Act and disclosure under California Transparency Supply Chains Act. And these two particular legal documents, they are focusing on human rights. So they under these documents, each company has to disclose what it is doing in its supply chain to ensure that there is no slavery and other violations of the human rights. So proper employment practices and paying equal wages and so on. And here, what we see is that the legislators are requiring the companies not only to write some blanket statements, I support human rights and move on, but actually we have to put in KPIs, and we have to put what we are striving for and what we have done to make sure that we are reaching our KPIs. And also, for example, under the UK disclosure, we have to, each company has to point out the most sensitive areas in its supply chain and describe what it is doing to tackle the sensitivity in these areas. So, for example, what we are doing as ADM, we have a whole process, what we require from our suppliers and how we are monitoring our suppliers, how we are checking that they are complying with this with these requirements. So the point I'm trying to say is that legal requirements are big and substantive, and you will be able as a company to properly comply with this only if there is not only buy-in from the commercial side, but if commercial side is actually driving this. Because it's not enough just to put compliance with these requirements on a support function and expect them to comply and then to drive the change. Actually, the business has to be the pioneer of the change.
That's a very number of very valid points in there. Thank you very much indeed for that. Will, your thoughts on that, about that? Yeah,
I mean, look, if we go from the change in attitude and look more at the approach. So, for example, I mean, if you're a CFO, and I'll come on to what we're doing in a second, but if you're a CFO of any organization, linking, I think, your funding needs with your ESG objectives, I think is absolutely key. So as we go forward, this is increasingly going to be the way forward, albeit that you will have this sort of potentially obligations from a more regulatory point of view as well to include. The issue is, how do you approach this? How do you go about it? And there are, as we all know, lots of accusations of greenwashing and people looking just to grab various labels, if you like, and say that we've joined this or we've done this or whatever. But actually, as Ben was saying, or both Ben and Maryana, really what people are looking for now is this sort of positive impact on the ground. Are you actually being able to make some real change happen? So being able to collect quality data and then being able to measure and then be able to transparently identify where there are gaps in the ESG issues, identify those and be able to improve on them is critical. And if you can do this, so basically my message would be choose wisely in terms of the approach. Don't just run for the first pony in town, so to speak, that you think everybody else is doing, and therefore we must do the same. Look at it from your business perspective. How can you be really clever about making commercial benefits as a result of some genuine ESG success? And I think you could put it in a different way, that from a funding perspective, if you don't approach it in this way, longer term, I think you could be uncompetitive with your funding and be behind the curve there. So a lot to think about, but that approach, and very quickly from a Czarnikow perspective, without boring everybody, but we've been doing a lot on continuous improvement rather than just looking at pass or fail. As Eddie mentioned earlier, we've been looking at this whole continuous improvement structure. We've set up a program over 5 years ago, which is working very well for a whole load of people throughout the supply chain. And that can bring in benchmarks along the way. So you're able to be agile as and when certain new criteria become more key, we can bring those into the program. So it just gives people a feel for approach, and that continuous assessment and third-party verification, I think, is a really key way to be able to measure impact and make real progress.
I like the way you're saying that, because it ties in with some of the other things about measuring, reporting and disclosure. And I want to explore that a little bit more at the moment. But first, for our audience, dear audience, please ask us questions. We have some coming in already. In a little while, I'll be starting to put them towards our panelists, but please keep them coming in, and I'm going to put them together and come up with some good questions on your behalf for answers that you need. Now, Ben, the measuring, the reporting, disclosure. Coffee is in one of those, as you say, supposedly short supply chain, but can you adequately look at it all the way through and measure, report and disclose that?
It's achievable. It is achievable. And I think that this is where larger companies who've got, larger companies who are integrated in the upstream part of their business, have got a better opportunity to really help drive the change as well, because they're able to manage that supply chain and they're able to understand exactly who the counterparties are. They've got people, they've got boots on the ground, and are able to compile the necessary farmer lists. They can actually get a credit, they can get quality data, obviously from their staff they have on the ground. Now, data in commodity trading is essential, but sometimes the collection of it can be slightly challenging. I think what you're seeing a lot of, and I've been doing some work with another company who's doing some work on carbon and on carbon capture, and they've got some very interesting ideas. And again, it's a simple solution. They're looking at GPS, they're looking at satellite data, they're using that, and we've seen that from some of the other presenters as well, about you've got this open source information, which allows you to kind of go, right, well, this is actually enables you, and if you've got some data analysts as well, or you can outsource, because there's plenty of good data scientists now, you can use this data and that can help inform some of your decisions, and it can help smaller companies such as ours be able to have a better handle than purely relying on your counterparties. I mean, I would say still, as a small company, we rely strongly on our counterparties, but then this is based on also your counterparty risk and your counterparty selection, that you rely on people you've worked with for a long time, you trust, and you know that when they provide you the information, they will give you the right information. Well, not the right information, that's a qualitative statement. They give you the accurate, correct information that you need to be able to fulfill the criteria. But it is a challenge, and I'd say for me as a smaller company starting on the journey, is you have to pick what you want to achieve as your criteria and say, look, this is what I would like you to measure me on. I want to pick a few things which I can report effectively on, because I'm not going to be able to provide the breadth of information that, say, a larger corporate or a larger trading company who's got boots on the ground and has better data collection than I do.
So from the trade finance point of view, are the banks asking you for specific information that's related to ESG in that regard?
At the moment, it's more because of the alternative space that I'm finding myself looking in. They're more interested in the broader approach of what we're doing from a sustainability process, our policies, the way that we are structured as a business, the fact that within the small organization that I have, we have certified coffee trading, so we are bound by the RFA and UTSCAFE as well, and we buy from certain coffees, we buy from RFA accredited partners as well. So they have comfort that our supply chain is accredited and audited and certified, and that's proving sufficient at the moment. But again, this is very much from the alternative space.
I appreciate it. Thank you very much indeed. Maryana, with you and your members, I mean, you're part of big organizations, big commodity companies. We're doing many different commodities. I mean, is it easy to keep a handle on everything? Because you may not be able to necessarily, what one trade finance provider requests is not the same as another. Have you seen any commonality across it, or are there sort of glaring differences? You've seen some banks not want as much as you'd think they'd want, and others want a lot more. What are your thoughts?
Well, we think that the key areas that the banks or other investors or institutional investors are focusing on now, and this I think this is where upcoming focus is going to be. This is going to be on diversity and inclusion and the representation of women and equity general in the business, in different levels of business, from top to the middle and to the starting level. Then there is a whole chunk of environmental impact that the company is doing. So you have the climate change, carbon emissions, and so on, depending on the business. And then there is a third area which we think is also becoming more and more relevant, is the social impact that company is making overall in the communities where it is active. So, and that's here where we are showing in our disclosures and also showing to the banks and other investors specific projects that our company or other companies are doing on the ground in the communities where it's working. So I think these are three areas where we see increased focus at the moment. And obviously, as I already said, I don't want to repeat myself, but it is very important to be able to identify the weakest points in your supply chain. And this is where everybody, the investors, the society, the regulators will be asking questions about. So depending on what is your weakest point in what commodity, is it the human rights aspect, is it the carbon emissions aspect, that's where you have to be sure you will have most of questions, and you will have to deliver your the strongest disclosures.
I think that's very valid, because there's been a lot of talk about carbon. There's been a lot of talk about digitalization and moving over, where the ESG picture is a lot bigger than that, and covers everything from corporate governance through to the environment, through to social aspects, as you mentioned. Will, what are your thoughts on all this?
Yeah, I mean, look, I think everything is evolving very quickly, and as we've discussed earlier, that there's a changing approach, which is great. When we look at the banks and other funding institutions, I think, as I mentioned earlier, they're perhaps slightly behind the curve on the TF side, on the trade finance side, but and that's just a general comment rather than being specific. But the key bit here is that I think where they're getting to now in general is looking to avoid reputational risk. So the first stepping stone, which is great, is looking at the mitigation, ESG mitigation. But I think obviously as we go forward, if people need to go further and look at, okay, how can I really make an impact? How can I make a massive change? And the criteria, I think, will depend on geography and on product, the various supply chains concerned, in terms of what are the key criteria for that particular specific product. Ben obviously mentioned East Africa and coffee. So there'll be some very specific issues there that will be more heavily weighted, and that's why I think it does need to be bespoke, and people really do need to focus on the particular areas that are most relevant for that particular trade-funded supply chain. So I think that the last couple of things we've mentioned on data, it's absolutely right. There are some of the data is actually relatively easy to capture, and other bits are much harder, especially the quantitative data. It's very difficult to get that with real credibility. I can't emphasize the importance of that sort of continuous third-party verification, and to back this up really ideally on an annual basis, so that you can really see transparently how things look year on year, and hopefully see that improvement and identify those gaps. So there's a huge amount in this subject, and I'm rushing through, but it's just to give a view. So approach is key. If you set off in the wrong way, I think you could end up spending a lot of money and actually not achieving very much. So it's really worth thinking these things through before you head off. Anyway,
that's very, very appropriate. I agree that it's a whole big area, and getting your strategy right at the beginning is obviously key. Now, I'm going to ask one more question before we go to our audience, and that's this. There are new trade finance participants. We've had the banks, but a lot of them have stepped out of the market, and then some have come back in again, and some have gone out, and you're not quite sure whether they're in or out, and what their commitment is to trade finance. At the same time, there's been a consistent demand, which has grown, obviously, and that demand has turned around and said, well, we need to go and get some money from somewhere. And if it isn't the banks, it will be somebody else. Now, initially, that would have been the hedge funds. Now we're looking at private equity. Now we're also moving to fintech, and some of those areas are moving into trade finance. And I wanted, Ben, as a startup, the banks weren't always the be and all end all for somebody as a startup. Have you thought about some of the other alternative venues for financing for trade, and what are your thoughts about them?
No, absolutely. So as a startup, we approached all the banks, which obviously people have worked with for years. I mean, my background, I've worked at some of the larger companies, ETF Man, and a few of the larger entities as well, where you have the opportunity to have balance sheet loans and revolving credit facilities. As a new startup, you don't have that because obviously your balance sheet is small. And obviously you go to your traditional lenders and you don't quite match their criteria. So the new guys are providing opportunities. So we've looked across family offices where we've seen some interest, particularly some of these new trade finances. And again, it's not a question of, by no means is this greenwashing at all, but I feel that people are, particularly where you look at things, people are interested in what we do in an agricultural perspective, because they see, particularly in coffee benefits from fairly high volatility as a tradable product. The returns can be good, but also everyone drinks coffee. So people like the story when it comes to coffee. They like the story when it comes to other agricultural products as well, because there's an element, by the very nature of agriculture has to be sustainable, because you have to keep feeding yourself and you have to keep drinking coffee. And so obviously that's a very broad brush coverage of it, but some of these funds, some of the family offices, people are interested in what we're trying to achieve here and what we're trying to do. Obviously we set the business up in such a manner to be focused on a more sustainable generation, to work with our partners in origin, and it's in our interest to run a sustainable business. So for us, it's been interesting, and I think there's great opportunities for within the alternative space.
Thank you very much. I mean, the idea of family offices is, I was thinking about other entities in there, and family offices are one of the ones that has actually cropped up in a number of conversations. Now, Maryana, for established commodity players, big organizations, the banks have always been the go-to area. Have you considered looking at them? Do you think they have better understanding of the ESG situations? Are they also less strict, maybe? Or would you say, no, I'll still stick with the same players? What are your thoughts on that?
My experience is that banks do have some understanding of their situation. Banks do want to see certain wording in the annual accounts of big trading companies. They want to see certain disclosures. They are asking questions about supply chain. So I think it depends very much on the bank and also on a commodity. But again, my experience is that they are trying to get to the bottom of this. And as Will has correctly pointed out, it's about managing reputational risk. First of all, for the banks.
Absolutely.
Yeah.
Will, maybe somewhere in between Maryana and Ben, you have a situation that you're looking at, and have you thought about maybe family offices and private equity or hedge funds to look for financing where potentially you may think, actually, I'm not sure if this bank is going to be here next year providing the same sort of financing?
Yeah, it's a very good question. I suppose one of the things we found is that some of the banks are quite siloed, and so that especially as a company, we've branched out into a whole load of different products. So that becomes quite challenging. So where are we heading? It's not just with the banks, and as Maryana says, a lot of the banks are now looking at this very sensibly and looking to progress in this area, which is great. But we're also now looking at other development funds who really understand ESG. So from a competitive positioning perspective, to be totally frank, if we can demonstrate that we genuinely have some IP in this area and can help deliver value through our commercial leadership in the supply chain, then they're obviously super keen to look at funding this sort of structure. So yes, we're definitely looking at different routes and finding success in different areas, especially where, and the neat thing here, and this is a really sort of message to the banks, which is tricky, but agility wins. And so the ability to have flexibility, and increasingly with more regulation going around the world, the banks are becoming more rigid, I would say. And so this potentially creates more of a space and a pool for all of the different funding entities you've mentioned.
Thank you very much indeed. Okay, I'm actually going to now go to some of the questions we've been asked, and there's a specific one I'd like to put to Maryana, if I could. It's from Sultana. Could you expand on the coming regulations on ESG and finance? Do we expect any sort of harmonization at a global level in that respect, or at maybe even a regional level? I'd add maybe there's an EU one, or maybe there's ones for Africa or ones for Asia or Latin America. What is coming up, and is it going to be harmonized?
Yeah, that's a very good question, and I think it's a very tough question. So
yes,
it was
an easy panel. Sorry.
We see a lot of legislation coming up in Europe, and it's very much, I would say, fragmented legislation. Like, you know, women on boards in some countries, then human rights in the other countries. So we haven't seen so far like a strong legislation that is upcoming, and especially that would be harmonized, and that would harmonize disclosure around all ESG criteria, or most of them. Of course, with the European Green Deal, we expect that there will be something coming up, but personally, I haven't seen the draft yet. But we have seen already the draft of the European Code of Conduct for Responsible Food Companies. So that's going to be a voluntary code of conduct, but that code of conduct will, by signing that code of conduct, specifically food companies will undertake to do certain disclosures in the ESG space. So that is interesting, and this is something that is happening at the moment right now. We also saw a Swiss initiative, and we monitored it as VISTA very closely. That was a responsible multinationals initiative that was put on referendum last year. It didn't go through, but it did provide for disclosure requirements for which is very interesting, for multinationals based in Switzerland, and that would touch one way or the other most of a lot of trading companies in Europe. So that initiative didn't go through, but there will be another legislation that is currently being developed in the parliament. So in short, there will be some kind of disclosure in Switzerland for sure. The question is when and how it will look like. So just maybe to finalize, we see a lot of legal requirements coming up in different countries, namely in Europe, but we do not see one harmonized approach yet. And it would be very nice to have it indeed. That would simplify the life of many trading companies.
it would be too much to ask for harmonization at this level, I think, at this time. Later, maybe yes, but at this particular point, no. Okay, the next one, actually, I'm going to tie in with something I've actually had around here as well as a point I wanted to talk about. It's from Juan. What are the main constraints to fulfill ESG requirements for trade finance and for trade financing? And I'd also throw in, what are the difficulties around due diligence? Ben, would you like to expand on that for our audience?
I think the main constraints are always going to be resources, and it's the amount of time you have and the amount of people you have, and also the requirements which are put on you by your lender. So it's always going to be a matching element of what does your lender want? And this sort of ties in slightly with one of the questions further, which is also there, which is the criteria. How do you know which criteria are the right criteria for your supply chain? Well, each supply chain is different depending on what commodity you're involved in. So you need to analyze from a risk perspective, I think, what your supply chain is, and then address that. So by addressing that and then tying that in with what your lender is supporting you in to achieve, then you should be able to get to a point when actually you can fulfill the requirements quite well, because the two things should be, they should be aligned. The efforts of the lender and the trader should be designed in such a way whereby we actively are working together collaboratively to achieve a positive good, which is obviously fulfilling the ESG criteria, but there's a reason for it. We're not just doing ESG for the sake of doing ESG. There's a wider reason why we want to achieve this.
Thank you very much indeed. Now we're running a bit short of time. I've only got a few minutes left. So Maryana, could you add some short thoughts on that as well, please?
Yeah, I completely agree with Ben that the key challenge for the companies is a desire to do it, and second is to have the resources to do it. So it requires a lot of planning and internal organization to make sure that you have the focus on it and you can also deliver. Resources is very important. And I also wanted to comment a little bit on the due diligence of your supply chain with all these legal requirements and also requirements from investors. And these are not very new requirements. I think Nordic banks were talking about this already like 10 years ago, but it's becoming more and more mainstream in the other parts of Europe. It will be key now to do due diligence of your supply chain, to do it on a repetitive basis, and basically to get closer to your supply chain. Your companies really need to know from whom you are buying, which product you are buying, and who has produced this product. That's becoming more and more important.
Thank you very much indeed. Ben, William, a few short words on that, if you could, please, because we're just running out of time at the moment.
Sure. So totally agree with both Ben and Maryana. Commercial pull-through. So being, I think, partnering with people within your supply chain is key to make this change happen. Using commercial acumen there to encourage people to work with you on it, and potentially bringing in more of the multinationals who may be your end buyers, for example, of your coffee or whatever it might be. So actually encouraging them to come back further and look to assist in, once you've identified gaps, how can they assist to help their supply chain, because ultimately they're the ones buying your goods.
Brilliant. Thank you very much indeed. Okay, we're coming to the end of our session. There are questions. Those, please email them directly to the panelists, or via me if you like. It's up to you, or via Commodities people. But I'd like to leave with a quick thing which I always ask from all my panelists, which is, Ben, can you give me in 7 words or less something for our audience to take away with them regarding this particular subject of ESG criteria in trade finance?
I would say my 7 words are opportunity to drive change for the better.
Good. You're well within the 7-word limit. Opportunity to drive change for the better. Maryana, what would you say?
I would say that ESG is an important topic that we cannot get away from. Sorry, more than 7 words.
Well, I'll let you off. It's about 7, but thank you very much. We can't get away from this, and it's going to grow much, much bigger. And Will, your thoughts on it for 7 words or less?
Link your commercial aspirations with ESG objectives.
Thank you very much indeed. I'd like to thank you all, the fantastic panelists, and you, dear audience. You've been absolutely brilliant. Thank you very much for your questions. I hope I've been able to try and fold in.